Morning, everybody. Hope you guys are doing well. Morning, Dan. Morning, Matt.
Morning,
Good
Troy. Morning,
morning.
Matt.
It's cold in Knoxville, Tennessee. What's it doing in Indianapolis this morning?
It's cold, but it's going to be warm. So hopefully, let's check. We're at it's supposed to be 70 degrees today. So we'll take it. I won't
Yeah.
have to wear a hat this afternoon.
Yeah. Today, I think across the nation, it's one of those weird days where it's like 40 lows, 80 high some places. So it's going to be it's going to get warm. You have to bring multiple outfits when you go anywhere.
That's right. And yeah, didn't they say Knoxville? Like, would you say 80 today?
I
or
think
70?
like 79, I think.
Yeah, we'll take it.
But here's the thing. Yesterday we introduced our new theme song. The reviews have been good. One of the things I heard was that, hey guys, listen, you're underselling yourself. That was like a children's theme song, video. You guys need to take yourself more seriously. This is a financial show, even though it's not financial advice. Options involve risks. This is talking about markets. You guys need to show yourselves to be the professionals that you are. So I took another stab at it. Me and my friend helped me. I got a professional graphic designer to help me. So yeah. Let's start the show.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Mass back testing like a daddy Mac. Dan's 30 years got our way. Trading life and markets every day. Option Omega, you're traded home, where every move makes you feel less alone.
I'm shocked you got that footage of me in the high rise. Like I didn't realize there was a camera there, but
yeah,
there's cameras everywhere, I guess. So
my friend basically said, Daddy Mac needs to be actually like a Daddy Mac. And then my kids heard the song and they're like, what is a Daddy Mac? And I was like, go to bed. Anyway.
Go to bed.
All right. So
all I got to say is you did outdo yourself. That was just very moving.
I appreciate it. Yeah. And I love the idea of just professional videos, just being money falling from the heavens, and people dancing around it. So anyway, all right. We got 3 things on the agenda, real quick ones. We'll go in order of importance. Apparently this week, fellas, there's a Bloodworm moon, which leads me to think, are these people just making these names up as they go? Do they just think of names for moons? Because I keep hearing like, hey, this is a super red nova moon, or this is a dwarf red monster demon moon. And I'm like, I never heard, it was just moons when I was a kid. There's a full moon, a half moon. Are we going, this feels like such a news talk segment. Are we going, this is Stephen A. Smith right here. Are we going overboard on these moon things? What are you guys' thoughts on this?
I like the graphics. They look, they don't look like the moon to me. If that's what the moon looks like, I'm okay calling it with calling it with a descriptor, giving it a name, because that's impressive.
Yes, anything with blood in front of it is kind of cool, like blood, like blood orange or blood, or I think it's pretty cool.
It is by far cooler than like a half moon. or a full moon. Like I think that is definitely the case.
Blood gets your attention, doesn't it?
Yeah.
Put blood in front of something. Yeah. Blood.
Yeah. But they're so specific now that it feels like no one's actually going to remember it. Like it's all new stuff. Like you would never know, I'm waiting for that first person who like really knows the moon stuff. It's like, hey, I'm so excited. Woke up. I got this Bloodworm moon. Like it's like news things that people are like, today's a Bloodworm moon, but you didn't know that. And you're like, no, I didn't.
Yeah.
Thank you.
Yeah.
Anyway, all right, keep going. So if you look at the news sites this morning, economy cracks, lose $4 trillion. Trump stuffs off stock market plunge, hammers retirement accounts. Stock slumps yet again as fears grow about tariffs. So here's my question. How much of this is cyclical and how much of this is Trump? This, to me, feels a lot like Trump, this part of it. But there's always, anytime a president starts getting hammered for the stock market, I always get a little, I don't know. I feel like they don't have as much control as they think. But what are you guys' thoughts on that?
Yeah. Well, I think as my Irish grandmother would say, a bunch of malarkey. You ever hear that word? Where, again, we look back a month and a half ago, everybody who even people who had long stock in their retirement account are saying, we need to go down, right? Yeah. We have to go down, and it's not going down, right? So now that we go down, right, and they're saying the catalyst, I think a lot could be just, he for people maybe who don't like President Trump, why not blame him, right?
Yeah.
But I think it's just cyclical. I think it's just we needed to go down, and I mean this isn't unusual. I think what spooks people is just, again, think of what's the roller coaster place in Ohio?
Cedar Point.
Yeah. Cedar Point. Well, it's just, what goes up, goes up slowly, right? It took 4.5 months to do 500 points, to go up 500 points, 4.5 or 5 months. And it took 2.5 weeks to go down 500 points. So that gets people unnerving. And when we finally yesterday started getting around 5,600 in the SPX, then it was like people were starting to, like you're in a school room and you take your nails and you grind them against the blackboard, and it just, you're just starting to lose it. That's when the VIX, if you noted, the VIX started to like, all right, we're getting to 56. Now let's do what we're supposed to do. Let's fear a little bit. And it got, I don't know what the highs were yesterday, but I think it's just normal. I think just people, that they lose it. If you ask people who are going nuts right now, a month and a half ago, hey, if the market went down, oh yeah, I'm in it for the long haul, and saying all the right things. I'm an investor, but now they're like, uh-oh, this is the big one. And I don't think it has anything to do with. I mean, he's been in a couple months, and he's ruining the economy in 2 months. A president. I mean, good grief, how much?
Right.
That's kind of tough. It's like a CEO. Well, anyways, so that's my Matt. What do you think?
Yeah, I mean, so we're 5,600. Yesterday was the first time I felt like kind of like it broke through to the masses, because I think we were down. The SPX was down. When I say the market, I just mean SPX. Is shorthand, was down 3.5%. But we're basically where we were at right before the election, like 5,600, 5,700. November 4th, that week, we went from like 5,700 to 6,000, like overnight on the election. So, I mean, we're basically back where we were right before the election. Not a macroeconomist, not a prognosticator of any sort, and not a politician, but I will say that it was a pretty consistent message from the Trump administration that they wanted to deal with inflation. And the national debt of the U.S. has also been a higher focus. And just the two thoughts on that are, if assets are really appreciated, is inflation going to come down when SPX is at all-time highs? I don't know. I'm sure there's economists that would argue both sides. And number two, the national debt is being constantly refinanced, right? And the U.S. is paying so much on its interest. If the interest on the national debt is 3.5% instead of 5.5%, is that like a measurable difference? Yeah, that's a huge difference. And if the market goes down, the interest rates are going to compress naturally. So I think just from if you take it face value, again, this is probably as much macro analysis as I have, and most of it's just listening to people and kind of synthesizing and parroting them. If you take it at face value that like the US is actually getting serious about its debt, which has not happened in my lifetime, then maybe the focus is not to keep the stock market up like you could kind of argue it was the focus in 2016 in Trump's first term. So, I mean, we were joking about Trump doesn't watch the market. I see a comment Trump wasn't even on TV. You know, I think a lot of that messaging is intentional. So it's interesting. I mean, I don't know. It's the jumpy VIX or the higher VIX. It sure has an impact on strategies. I had a calendar strategy yesterday. It was interesting just to watch. It was a 5-7, many year back test. And at one point was like 80 or 90 points in the money, and it was down like 5%. Like it just insane how the higher vols. I don't know if we hit 30 yesterday. Let's see right now. Futures are down 3 points. VIX is about where it closed yesterday, it looks like. But just that it's so interesting to trade like multi-day strategies when VIX is this level. It's a totally different environment. If you put on a double calendar in 12 VIX and you get 90 points in the money and you let it open, I'm probably going to laugh at you, not financial advice, but comedic advice. But when VIX is 28 or 30, it's a totally different situation than when it's 12 or 14. So it's interesting.
Yeah. And you know what? Let's be honest. If you talk most traders, right, that are around, depending on their age or whatever, their experience is not, most don't have a lot of practice with the high vol because it's so infrequent. If you look at the last 10 years in the market, we've been going up, right? Yeah. Mostly slow, trendy. So most students, their experience with calendars or butterflies or whatever the strategy has been in an up market. And so when the market goes down, this is a little bit out of their wheel well, right? And so I think it's also a way to look at it for opportunity. Look, not opportunity, for learning. And I think if something's uncomfortable, back off, right? I think people get this. What did Troy call that? Fear of what is it?
FOMO, fear of missing out.
Yeah, fear of missing, like almost like that video that Troy was showing, Matt, that dollars are dropping and it's
raining.
I just got to get in. I got to get in the market and get my share when it's like, unless you have, even for a beginner, unless you have some type of plan, and what you're going to do. It doesn't mean it's always going to win. And you're going to have, here's the thing, you're going to have losses. You're going to have losses. You try to limit them. This is kind of an unusual situation. So you may have a little more losses depending on your strategy that you normally would, but you learn from that, right? It's not like the world's probably not going to end. And, this will see itself out, but it's just the speed of it is out of everybody's wheel well, right? Where you're dropping 160 or so points in the SPX. Yeah. It's kind of like surreal. It's like you just sit back and you wonder what type of music do you have on when it, like some Eric Clapton. I don't know. I mean, it's just like
elevator jazz.
Yeah, elevator jazz.
That thing is a good analogy in my mind. It's like yesterday, there's a guy named Squeeze Metrics. His name's not Squeeze Metrics.
His name is Lemon.
Yeah, Lemon. That's right. There's a company called Squeeze Metrics, and they provide data. And smart person. I don't even know if it's a guy or a girl, but they said yesterday that yesterday was the first day during this downturn where they noticed that things were starting to break a little bit. And so even little things about reporting time for some FINRA stuff, like just the plumbing, not necessarily like the market's breaking, right, in a true sense, but just things are anytime the market starts panicking, this is the thing that's always interesting to me. It's really built on trust in some ways, like the system. And like a bank run, there's a certain point where the bank has no more control in it. And that wasn't yesterday at all. But he was saying there started to be a little bit of that when we're down 200 points intraday. Let's look at some tests real quick, because I think it's, the analogy, I think Dan is right. Like a lot of trading, option selling, option range bound trades are like guiding a kayak down a river, right? You're just guiding the kayak. Yeah. Sometimes you hit the bank. You want to like risk protect, so you don't want to like hit the bank a bunch of times or hit a rock every time you know. But then there's days where it's like the wind's blowing and it's almost unnavigable, right? I've certainly fly fished or tried to fly fish in rivers before that were just unnavigable. Both dams are flowing and things like that. And so there's different strategies you can do, but you really got to take a different approach. I am not suggesting what we're about to look at is one of those approaches. So let me preface this. I told Dan these are some real dumb tests this morning. Options involve risks. They're not suitable for all investors. Consult with your financial advisor. The name of this test is what you should do with this test. Don't do this. I'm begging you. This is for scientific purposes only. In the name of science. So what this is ran 2018 to 2025, because I've got to run it that many years to get any data, because it just doesn't happen a lot. And we know the old 0-1, the famous 0-1 DC that so many people love and cherish in their life. Well, the 0-1, this iteration isn't working right now. What this is a VIX min 26, max 30. And so the environment we're in, basically, just this range of VIX that we're in. It's one contract per trade. I'm ignoring the margin requirement, and this is why, because you should never do this. Because if you notice this is not a normal 0-1. This is something different. Because what I'm doing is I'm buying the 0 day and I'm selling the 1 day. So your margin is naked. This is a naked spread, and we do not ever advocate selling naked premium on this show. We have standards on this show. One of them is
we have standards.
Yeah, that's right. So, but what is interesting, the thing I wanted to show you is the idea of VIX being in backwardation. When VIX is in backwardation, this is kind of like the wonkiness that you get. Is that in a perfect world, you should not be able to buy the 0 day and sell the 1 day and make money from this, right? Like that's just not going to work. In these type of weird environments where everything's upside down, that does work. Now, does it work well? No, you shouldn't. And you shouldn't. Most of us, a lot of people couldn't, just put this in their account unless they wanted to get calls from their brokerage being like, what are you doing? Like, why are you doing this to us? So wanted to get your quick thoughts on that. I thought that was an interesting kind of just test just to show the wonkiness that like that's the environment we're in right now.
Yeah, what's interesting that you bring up, the first thing I thought of here, like it's a reverse calendar, right?
Yeah.
And right, you're buying the in a calendar, you're usually buying the further out, selling closer, and here you're buying closer and selling further out, right?
Yeah.
And to me, when I was in the pit, they would do this a lot. In more, not as much double, but I'm sure they did double, but they would do it in a high vol environment, a reverse calendar, because it's the graph it's basically like a speculative trade. I'm drawing my graph with my hands right here.
I love that. Yeah, no, that's perfect.
Who needs computers?
The original option modeling tool.
Yeah, the original Dan's option modeling tool. So it's a instead of like a long straddle or a long strangle, you benefit if volatility, goes up, and those have been working. But this is taking that thing that you're making money, you're getting, it's benefiting you if we move. It still has some of the characteristics of a long straddle, that you're negative theta here.
That's right.
You're short Vega, but a reverse calendar. Now, the reason why in the retail community you don't do this is because the brokerage firms destroy you with the margin. They have, their assumptions like you're gonna let the long expire, whatever you're gonna do with the long, and then you're left with these shorts on your far out, and your margin's gonna go through the roof. But in a portfolio margin account, this is a wonderful. This is actually a trade, whether it be at the money or out of the money like this, that makes sense, because in a portfolio margin account, they say, well, wait, if you go up 12%, how's this guy doing? Fine. If it goes down 12%, how are you doing? Fine. So they charge you very little. It's ironic, in a portfolio margin account, they'll charge you very little, but in a Reg-T or a normal, Tasty or a Thinkorswim account, they'll charge you a lot. But, as crazy as you said, don't do this in a high vol environment, and portfolio margin account, which is what traders had, right? Yeah. This was not uncommon.
Well, I think that's a great point. No, that's a great point, Dan. And I'm always happy, because my concern is always I'm Wild Westing it, and Dan has to come in and be like, guys, are you trying to get these people killed? So I'm really thankful sometimes when you're like, no, that one's actually okay, Troy. Because to the point, I had heard that before, that's more or less what market makers are doing all day in the pits.
Yeah, now you make a good point, Troy, that, obviously because you're dealing with, in this situation, we didn't have 0 day back in the day. Yeah. But if you're doing 0 versus 1, there's some responsibility there. Yeah. Right? That you can't just, let's say your longs expire and now you come in naked short a strangle, right? That could be, Houston, we got a problem. So, but anyway.
I think that's right. And I think you just show it without the VIX stuff. Like, you don't want to do it in low VIX environments. But anyway, I digress. I think it's I've always thought that was an interesting trade in high VIX environments.
That would be a strategy right now in a portfolio margin that you would consider.
For sure.
Because short Vega. Now, the other side of the coin, you are negative a lot of theta. But
man, we should do a portfolio margin week where we just talk about trades that don't make any sense unless you have portfolio margin. I think that'd be really fun.
Or spam. What do they call that in the futures option? Spam?
Yeah. Spam margin.
I always say spam. Which is the thing? Spam that we would eat? Spam.
Yeah. Oh, spam. Yeah, I love it. All right, I'm going to keep going because I want to keep going. So this is, I don't even want to talk about this. This is just a super dumb one. But I was looking through last night. I was like, what is working? Is there anything working that is premium selling and not just long strat? Like, it's fun to talk about long stuff, but good gracious, is there anything working? I pulled this sucker up. This is the last time I had ran this was, I think, 2020. I hadn't run this in 2 years. It was just sitting in my, account looking at this. And what this is, it's randomized as much as possible. I'm not like picking these times, but this is a tranche. I call it a tranched iron fly. It's basically you're selling the 50 delta and you're buying 100-point wings, and you're doing it all day, and you are exiting when the price moves in either direction, 25 points. It's like the Wild West. It's like the wind's blowing and you're putting up these what are those hurricane chasers or tornado chasers? You're like throwing up those little things, To me, it's interesting. Now here's where it gets crazy. Let's put that down. Let's put the 10%. I had max contracts on there because I think it's interesting to limit it a little bit. You really have to limit this because you're going to get days otherwise that are just like you're going to get some big losers if everything keeps just moving down, right?
Mm-hmm.
As it did this week. But I was trying to think of this idea of saying, well, what is something that works where you're not in the market all day, you're picking your spots. You're kind of in this one picking your spots indiscriminately, but I don't know any. There's not much to glean from that other than just I thought it was interesting that like it hadn't worked since 2023, and then if you put that 100 contract on, to limit it, it suddenly has some traction.
Yeah, I mean, my first thought was I'm not looking at the MAR on the winner. I was looking at that capture rate.
Yeah.
And I not to contradict you, I know you said you can talk about, debit trades and long, long vol trades. My predilection, my preference for selling premium in this kind of market is just very low. So I look at something like that and I look at the capture rate and I think, is the juice worth the risk of the tree branch knocking me unconscious when I pull the fruit down to juice it, which is a common analogy in Indiana. And I think I'm not sure the juice is worth getting knocked unconscious for, but I think your point is interesting, Troy, that like, can you go down to so the trade log, I mean, what's interesting is you're sampling the market at so many times. Like I literally, I don't know, have you guys ever had this experience before where you look at the market? I had this yesterday. I looked at the market and I had to remind myself what was the second digit the last time I looked. Like, okay, I know we're in the fives now, not the sixes, but wait, sure. Are we at 5,500, 5,600, 5,700? Where are my positions? What's the second digit that we're on? Because you have an intraday move of 3.5%. And so I think that's super interesting in this test that you're sampling the market at such different times, and you're going to get such a variety in the opening price because the movement is it's just so massive,
and that's the thing that's interesting about it. I mean, again, do I advocate
I think that's
launch?
I think that's kind of, or I might even I'm thinking of the word scaling, and because what you're doing here is that's kind of the saving grace, right? Because it is moving so much. I mean, it's crazy and it's like trading on steroids. This strategy should be like on Saturday Night Live or something.
Oh, that's right.
One of those. This would be like but it's the scaling part of it that I like because it's, you're okay. We'll try this data point. Oh, we'll try that data point. We'll try that. So you're losing on some, you're making on some, but I think it's that scaling thing versus if you did all of the, what if you did 15 or 20 of those during the day? If you did them all at one data point, you probably get murdered.
Yeah,
that's right.
This feels like when I look at this, do you know the song that's playing in my head? You guys know the song Yakety Sax?
Oh, yeah.
Like that. This feels like the Yakety Sax of back tests. Just like you look at the entry and it's like, oh my goodness, that's a lot of entries. Just going every direction. When the market is going, but that's why you've got a min VIX 20, and when you have a min VIX 20, like how much point move is VIX pricing in with a min VIX 20? It's pricing in a move.
Yeah, I agree. I mean, again, I said I went to bed last night being like, all these tests are terrible. I mean, there's just days where you're like, these aren't good tests. That's fine, it is, but it's what can you glean from it? In my mind, you glean from it is, market's moving. The idea, I think, might be a good idea. I don't know if it's a good idea or not, but the idea of saying, I wonder what happened if I pick my spot and I get in and I get out real quick and I don't just let the market slowly take away my life from me, all day long. So, I mean, here's the thing.
Yeah.
There's tons of people. I saw it in real time. I saw it yesterday. People say, hey, we opened down, 50, 60 yesterday, 70 maybe?
80. Yeah.
Okay, okay, perfect. We opened down 80, bottoms in.
Yeah.
Why? Because
Yeah.
we're down 80.
Yeah.
All right, down 100.
Okay.
Bottoms in. Why? Because we're down 100. I mean, the first half of the day, they just got, the whole day, because if you sold them at 100, you didn't see 100 again yesterday.
Right.
That's
right.
And so,
yeah.
but here's my point too. Like, this is the trickiness of the market. If you also said, hey, I'm going to buy a put down 80, you really didn't make, I mean, yesterday was probably an anomaly, but you're going to get wrecked. You're going to get killed if you try to buy a put.
As back testing shows. I mean,
exactly.
you can back test that, and it's not easy being green when you're buying puts down 80.
Dan, here's the thing. Oh, go ahead, Dan. Go ahead.
No, I was just going to say, it's like we think about it, a week or two ago, maybe 2 weeks, VIX was at 15, right?
That's right.
And, there's a saying, buy them when you can, not when you have to, right?
Gosh,
and there's nothing wrong, it's like the first signs of blood on the downside where you're getting huge moves. If you want to adjust a position, use a long put. Not that you can't do it here, but like Matt said, historically, it's not, buying 28. I mean, the only exception to maybe buying a put here is if I did, if you were selling volatility, maybe in an iron condor, strangle, whatever, at a 28 volatility, and you bought a put, well, it's different than doing an iron condor to 15 volatility and buying a put as an adjustment at 28. That's usually not really good, right?
Yeah, that's right.
So anyways.
Well, I love it. Dan, here's the thing. Rescue us from these insane tests. So you use the analogy, there's someone who's new to the snowstorm, or he wants to get out and drive. It's his first day driving, and there's a giant snowstorm. Like, there's certain days I'd say, just let daddy get out in the truck a little bit. Let daddy drive a little bit. But let's say they said, no, I'm a real boy. I want to drive.
I'm a real boy.
What are they going to do, Dan? Any suggestions to get started? Someone who's really new to trading.
Well, I think, sometimes we forget all the things that go into when you're a new trader, right? And, execution. I mean, that's a big thing that stands in my mind. Like when you're in the environment right now, execution is like, you're looking at $5 spreads that have a range of 2 to 9, and you're like, where do you go in? So I would, for a new person, if they came in this environment, in a normal environment, I'd say, let's put on a $200 trade and let's have a little bit of a plan and go from there. Here, my biggest concern for a new trader is they overpay $1 for something, right? Because they say, well, this was the mid price. There is no such thing as a mid price. There's a mid range. So if you're doing a $4 spread, you think, okay, this is cheap, $400. And then they print it at $6, and you say, buy it. And maybe you don't have some knowledge of what types of orders to use. And maybe you do something crazy and you put in a market order. And so you're losing, you're down 30% in 2 minutes, and you're like, I want out, or whatever. So I think in this market, which is very unusual, kind of an anomaly, I would paper trade because I'm concerned with the execution. But on normal, I would take a vehicle like, what's something that you could get your feet wet without getting in a lot of trouble. And you can, like, even in, SPX, I wouldn't, you could, but stick with stuff $300-400 and less, right? So like if you looked at a calendar trade, I'm just posting one up here in SPY, we're at 560. If you did a calendar, and a calendar is just a mixed month trade with this where you're using the same strike. So here I'm buying one April 4 560 call. So this would be a 560 calendar, and you're selling a March 28 560. So there's 7 days between the long and the short. But if you look, it costs $178. If the world ends, it's 178. And I think, SPY is a very liquid vehicle. So I think, you could get in there for pretty close to that. And then you got break evens from, let me just change the graph here. You have kind of break even points, which is, what is that? Maybe 542 and near 580. So that gives you about a couple hundred points in the SPX for this thing to roam around. So you get the experience of you're in the arena. You've got $178 of risk on the table. You're in the arena. You got a couple hundred points either way, and you can learn the experience. And one thing I recommend for beginners, write down some of the relevant information. Okay, I did a calendar, but write down the implied volatilities of each option so you can see how those things move. And you kind of put some goalposts here, 20 points up, 20 points down. I think stuff like that, they can get the experience without losing their mind, right? Whereas if they go into SPX and do in this environment and you do something like a $500, $800 trade, you can pay up dramatically. And that it would be my biggest concern. But I do agree. I mean, you learn by the live trading. But again, I think I still like even paper trading for a month and a half for newer folk, because that'll make you, at least, do you understand what you're doing? Because if you don't even understand what you're doing, what's the point in doing live money? I mean, because you're not going to understand it anyway. So, but if you understand the strategies, then you limit yourself to $200 or $400 trades. I mean, you could, in normal times, you could go in and do a 3-wide calendar in SPX for, $300, $400. You can do an iron condor 5-wide in SPX for $350, $400 total risk. So between SPX and SPY, how you structure the trades, you need to have a couple live trades on, very small, but but then you're getting the emotion and you're learning on that. So anyway, just a few thoughts. So SPY, I mean, I was just looking at for cheap one, SPY would be one, but another one would be if you look at like the last 2 days, the market's gotten beat up. Well, you look at what's pretty conservative, XLU, right? I'm just looking at a poor man's covered right here, but XLU, if you look at the last 2 days, the last 2 crazy days, Friday and Monday, were up. Look at XLE. That's another one where the last 2 to 3 days has been up, and they're $88. So here is just a poor man's, covered right. People, I think the bridge into options is doing covered rights, right? And here's just a diagonal. A diagonal is a mixed month spread, different strike prices. Here's $240. I'm buying the June 20, the 90 strike in XLE, or let's go back to XLU, the utilities. In here, something like buying the April 25, 78 strike, sell the March 28, 2 weeks out, 81 strike. So I'm buying April, what's that, 40 some days out. But you have this little covered right type graph diagonal, and I'm paying $1.17. And what I like about this is, when you're done with the March, or when that expires after, or whatever you do with that, you can buy in the March and sell an expiration 7 days out. You can do that 3-4 times. So you can get used to you can get used to trading and everything, but you got $100 of risk on, right? So
that's right.
It'll keep you out of trouble. So you can, so those are things with with newer traders, you have to do your best to protect them from their biggest enemy, and that's themselves, right? And the only way you can do that is size, right? Capital is everything. Keep, your first 6 months of trading, unless there's an exception. I'll just tell you, can I tell you one quick story? Do we have time?
Please. Yeah.
So I was mentoring this guy from Texas, and
mistake.
He came in.
That's someone from Texas.
That was the first thing. And he had we were going to talk about iron condors, and he had an iron condor on. And I said at the beginning, he goes, I go, is that a paper trade? I'm looking on his screen, and he had like 800 iron condors on. And I said, you're that's just a paper trade. He goes, no. That's a live trade. I did it true story. I did an 800 contract. I said, what? I mean, that's incredible, Cy. Why did you do that? But the answer was the best, which would come from a Texan. I said, why did you do that? He goes, because I can. I mean, I have the capital.
Well, that does sound like a Texan.
I can do it. So I didn't know. I mean, I was kind of, for about 30 seconds, I was just like, what do you even say to that? And I just said, I said, you know what? I would be honored if you would just maybe take off 95% of that. I'd be more comfortable teaching you if it was small. But he was very respectful. He goes, okay, Dan, I get what you're saying. And I go, but that was just, that'll never leave my memory. That 800,
oh my gosh.
I mean, this guy was.
What's the notional on that? I mean, what is he?
I don't know, but he must have owned 42 oil wells or whatever.
Oh yeah.
Maybe he fat fingered.
Maybe
he fat fingered it. He didn't want to tell me about it, but
anyway. That's right. Well, that's amazing. Yeah, 800. I
think he fat fingered it. Yeah.
Yeah, but he had the money in the account for it to go through. So that's
apparently.
Maybe as a parting thought, the opposite extreme is the market's going to be here tomorrow. You do not have to put a trade on. You don't have to do anything. No position
is a position.
Absolutely.
And this is not financial advice. Nothing on the show is financial advice, but for entertainment purposes, it's okay to sit on your hands.
The journey,
absolutely.
The journey is the destination.
A wise person tells me every day through text message, and as a friend trolling me, the journey is the destination. Which is true.
Yeah, and you know what? Like today, if someone's not going to trade today, which is fine.
It's fine.
I'd have at least three, 4 paper trades of strategies you were thinking of, lock the prices or put it and follow it. I think you could learn. You'll learn some things, just like we learn from going through every back test that Troy and Matt are going over. When you look into them, you pick up some things from it. So I think if you look at this as a journey, today can you can learn from this. It'd be horrible to go through these 3 weeks of a correction and not pick up anything like, how can I better myself next time? How can I change? I've got a list of 30 things that maybe 10 I did wrong during this on some trades, but 20 things I've learned that I'm going to, hopefully if I live long enough, the next time we go crazy. So anyways.
Yeah. Hey guys, we did it. Market's about to open. Hope you guys have a great day. Good luck in all your endeavors, and we'll talk to you guys tomorrow morning.